Hey grade 9s, so today we're going to be looking at the worked memo of activity 1 and activity 2. So if we look at activity 1, we start off with a revision of grade 8 concepts, and the first question that they ask there is to complete the following table by filling in the missing information in the blocks provided. So when we look at money received by a business, we look at money in. The subsidiary journal that we use is the CRJ, the cash receipts journal, and the source document that we use are either CRRs, your cash register rolls, or your duplicate receipts. When money is paid out by a business, we look at the cash payments journal, and the source document that we use is bank statements. Now, as I mentioned in the previous video, there are no cash checks used at all as of January the 1st, 2021. So any CPJ transaction, we use a mode of payment called the EFT, the electronic funds transfer, and our source document is a bank statement. If we look at the second question, it says complete the following diagram showing the cycle of how events take place. Now, if we look at the keywords, first and foremost, a transaction takes place. After the transaction, we then record the information on a source document. From there, the information from our source documents are posted to our cash journals. We then transfer the information from the cash journals to the general ledger. Thereafter, finally, the information from the general ledger is used to prepare or draw up the trial balance. The sixth and final step that is put in for you guys is after the trial balance has been completed, the financial statements can be prepared. Now, if we look at activity 2, in your own words, explain what a fixed or non-current asset is. A fixed asset or non-current asset is a long-term possession that is used to generate income for the business. Remember, long-term indicates a time period of longer than 12 months. So this would be any asset that we use to generate income for the business longer than a 12-month period. So the asset itself, we convert that into cash, or we don't really convert it into cash, but after 1 year, 1 year or more, so longer than 12 months. If we talk about the 8 assets, we have 3 non-current assets. Most of you will remember BEV from last year, land and buildings, equipment, and vehicles. If we look at our current assets, this is short-term within a period of 12 months, so a year or less, And this is also used to generate business income for the business, and it can be converted into cash quickly, hence we call it a current asset. Now we have bank, we have debtors control, we have trading stock, we have petty cash being small amounts of cash generally used for small purchases on a day-to-day basis. And finally, we have cash float. Now remember, your cash float is the money in the till at the start of the day. Our trading stock is goods that we need to sell in order to make a profit using a markup. Debtors control is when people owe us money, and bank is when we pay or receive cash. If we look at question 3, it says read the following carefully and then answer the question that follows. Johnny Giles decided to start a dry cleaning business, JG Cleaners. He recently won 250,000 Rand on the lotto and decided to invest 75% of his winnings in his business as his contribution to the business. During the month, he bought the following items from Kelsey Traders. 3 industrial washing machines at 9,250 Rand each, 2 industrial dryers at 5,500 Rand each, 3 ironing presses for 6,000 Rand, receipt books, invoices and pens for 990 Rand. The first question, A, says, calculate the amount of money that Johnny Giles contributes towards his business. Now, in the information, they tell us that he invests 75% of his winnings, which was 250,000 Rand. If we go 250,000 and we multiply that by 75%, we should get the amount that he invests in his business, which should be 187,500 Rand. So that is what Johnny Giles contributes towards his business. What is the correct accounting term for the money that Johnny Giles contributes towards his business? Now, when the owner of a business contributes money towards his business, we call that capital. Remember, just capital, not capital contribution. The account we work with is capital. Now, C, name the correct accounting term for the items purchased from Kelsey Traders. Now, if we look at the correct term for these items, we have industrial washing machines, dryers, ironing presses, and receipt books and pens. Now, I'd go as far to say as the first 3 are assets, as they would fall under equipment, and our last one, receipts, books, invoices, and pens, we have stationery. So the correct term for them would be assets, non-current assets, as well as stationery, which is an expense. And then finally, calculate the amount paid to Kelsey Traders for the items purchased from them. So we have 3 industrial washing machines at 9,250 Rand each. We have 2 industrial dryers at 5,500 Rand each. We have 3 ironing presses for 6,000 Rand. So there must be 2,000 Rand each. And our receipt books and pens for 990. So if we do the math for those 2, 3 times 9,250 gives us 27,750. We then have our 2 times 5,500, which gives us 11,000. And we add that to our 6,000 and our 990. So 27,750 plus 11,000 plus 6,000 plus 990 should equal 45,740 rands. Guys, that is us done and dusted for today's memo. Please make sure you mark this and make any corrections if necessary. Thank you.